Welcome to Matters Financial and Geopolitical from a Frontier. If you haven't had a chance to watch the MindSpeak session with Professor Howard French, you must. And there is the presentation, and then that's followed by the Q&A session where we sort of disembarked from the China-Africa story, looked at it more closely, looked at China more closely, looked at the paramount leader. It's really great content and particularly relevant right now. And I thank Professor French and the Columbia University Graduate School of Journalism and the Columbia Global Centers for the support in putting that together. I'm halfway through his book, and that has also opened up my eyes because it's given me depth in terms of looking at the current situation. Really interesting. International markets, investors now expect more and more rate cuts from the Federal Reserve. The 2-year US Treasury yield is now at 1.85%, down from 2.96% in November. And it is this which has weakened the dollar in the last few sessions. Current Fed target rate is 250. Currency markets, the euro is at 112.50, the dollar index is at 97, Japanese yen 107.99. That's been a big mover, the yen. Swiss franc 0.9915, the pound 126.77, the Australian dollar, where they cut rates a quarter point, 0.6987. India rupee 69.2775, South Korean won 1181.80, the Rial 388.54, Egyptian pound 16.766, and the Rand, which was actually quite firm in the morning but got undone by the worst GDP number for 10 years, is a lot weaker, 1% when I checked last. This is a dollar index chart from Art in the Chart. We need to find some support around here, which is what I'm expecting. Alexander Elder, and I've never heard of this, talks about the Hound of Baskerville's signal. Alexander Elder talks about the Hound of Baskerville's signal, which is when the lack of follow-through on a good pattern is a clue to look the other way. This is happening with the dollar index. It couldn't rally despite a triangle breakout in April, and it's a sign to look down. Certainly, we've been looking down. The question is how much further we look down. Euro dollar, this has rebounded all on the back of the rate cut expectations in the United States. Australia cut its key rate to a record low, 1.25%. As I wrote over the weekend, bond yields in tilt mode. I said the US curve is inverted, and typically curve inversions are harbingers of recession. Markets and prices exhibit patterns of correlation, and essentially my perspective is that it is the correlation that has exerted a pull effect on US yields, and therefore the recessionary signaling of the yield curve should be discounted. Strong safe haven demand, correlation element to recent yen strength, because the yen 10-year yield was already in negative territory. It just hasn't moved very much, whereas everything else has moved towards it. It was not too long ago that everyone was predicting a Weimar Republic outcome, or if you're looking for a more recent vintage, then dial up Caracas, Khartoum, or Harare. Classical economic theory predicted that if lashings and lashings of freshly printed money were injected intravenously into the patient, then the value of money should devalue and inflation run off the charts. Clearly, this has not happened. In fact, inflation gauges, and the European one was the latest, are slumping, and inflation is like a patient etherized upon a table. Trump's tariff war has spiked earlier high jinks, stock markets have lost ground, and investors have continued to run for cover and safe havens. You will recall Ben Bernanke's riposte when asked why investors buy gold. People hold gold as protection against what we call tail risks, really, really bad outcomes. We're at 1325, we've rallied from 1275, it's been a big move. I spoke about oil being an interesting proxy because it's been a tug of war between sharpened geopolitical risk, the matter of Iran, which sent prices higher, versus concerns around global growth, and the latter has now overwhelmed the former. And essentially what I'm saying also is that, if you look at the tariffs, you might just say, we might disagree about the ratio of who's going to absorb how much. My estimation is 20% by the US consumer, 80% by the Chinese exporter. Others think that is far too out of whack, but that's what I feel. And essentially, I think that's going to be inflationary as well. So US inflation, I don't see going down. Interesting times, says Dan Del Foller. Commodity markets, as I said, people hold gold as protection against what we call tail risks, really, really bad outcomes. Gold crossed 1,300 on Friday. Tracy Alloway tweeted, "Gold bug sighted, biggest buying of ETFs in quite a while." And here's a chart from J.S. Blockland from 1275 to 1325. Stock market anxiety rising, or global anxiety rising. Crude oil, as I said, an interesting proxy because it's a tug of war between sharpened geopolitical risk, particularly in the matter of Tehran, versus concerns about global growth, and the latter has now overwhelmed the former. Brent crude is down 18% since April 24. Mexican avocado prices jumped to the highest since August 2017. The benchmark has surged 65% this year. Avocados don't trade on exchanges like soybean futures in Chicago or copper in New York, and like other relatively opaque fruit and vegetable markets, prices start with producers. A tough season has squeezed supply and pushed up prices, according to a survey Friday of half a dozen sellers in Mexico City's busy wholesale market. I've written about the crypto avocado millennial economy, and I wrote about the zeitgeist of a time as its defining spirit or its mood. Capturing the zeitgeist of the now is not an easy thing because we're living in a dizzyingly fluid moment. Gladwell stated, "Ideas and products and messages and behaviors spread like viruses do." My point is that the millennials discovered the virtues of avocado, the behavior spread like a virus, and boom, prices skyrocketed. And that the avocado price surge is an example of the new 21st century millennial economy. And that is high-tech, millennial, crypto, avocado, exhibits viral, wildfire, exponential, and even non-linear characteristics.